Guys, I'm going to show you in this video a very, very easy and effective strategy to extract some money from the market. Get those pips, baby. So let's jump into this one. So guys, there are many ways in which you can trade the financial markets, whether it be Forex, FX, whether you're trading indices, stocks, whatever the case may be, hundreds, if not even maybe thousands of ways. There isn't one holy grail. There isn't a holy grail anyway. It's just about finding what works for you, whether you like using indicators, moving averages, Fibonacci's, whatever the case may be. And then it comes down to as well your timing, right? You may not be full-time. You may need to find something that works best for you in terms of just approaching the market, looking to trade on a sort of a more part-time basis, whether you're looking in the morning or the afternoon or in the evening, just outside of your full-time job. And there are plenty of opportunities, of opportunities. As I say, it's just about finding what works for you in terms of timings, but not just timing, it's also personality, right? I always say that with trading, it really uses a lot that is not within our human nature. Now, I have, after many years of failure, I've got to the stage where I've eliminated all those errors, those normal human errors, being sucked in by certain emotions, so on and so forth. But that took a lot of time and pain. Now, not everyone has that within their capability. That's why trading is not for everyone. However, if we can bypass that somewhat, at least try and look at trading strategies or ways in which to approach trading that suit our own personalities, then we may be in a good place. So, if you, for example, are not so much of a patient person, you're more sort of maybe a little bit impulsive as such in terms of your personality, you may want to look at being in and out of the market, okay? Not necessarily holding those trades for a long time, but you may actually be a very patient person. Now, I'll give that to you if you are. If you are a patient person, then you can sit on some trades and obviously swing, which holding trades for several days, or position trade, weeks to months, so on and so forth. It really, as I say, depends on you. Don't go through, if you don't find it within your capability and you may have a lot of responsibilities on, then don't stress your body out. Try and look at other ways to approach the market, because there's plenty of ways to do that suits you. Now, in this, I'm going to be showing you a way in which you can trade a very simple, clean strategy that you can approach the market on a, whether you're just looking at short term, as I said, if you want to be in and out, or even swing sort of more long term. It's a very simple strategy. So let's go over to the setup and take a look at that now, baby. So guys, we're all sat down and comfy at our setup. Now let's take a look. As I said, I want to show you this strategy that is very simple to use. Whatever time that you have that you're able to give to Forex, you'll be able to find many opportunities with this, okay? And it's simply one of my favorite things in which I implement into my own trading. It's not the be all and end all, but it's part of my trading at the moment. I'm giving you some nuggets here, and that is using flags and pennants. So you may have come across those before, something I go really in detail into my own technical course. But let's take a look. As an example here, we have on the chart, as you can see, GBP dollar cable. Sterling dollar, GU, whatever you want to call it. And I've got this on a daily time frame, first of all, and I want to show you some opportunities in which that I would have traded perhaps. I've really stripped down a chart for the moment. I've made it very clean. I'm a massive advocate of not having too much on the chart. Oh, there we go. Not having too much on the chart. I like it to be as naked as possible, because with that, sometimes I think when we've got too much going on this chart, like multiple drawings, Fibonacci's, MAs, it can just be so polluted, and it can cloud your head. Just like if you're working in a messy environment, yeah, how are you supposed to think clearly, have that crystal clear vision? You can't, man. I can't anyway. That's why I like tidying up. I like to be in a clean space, a clean trading environment. So key. We can go and talk about that on another time. But look, let's jump straight into this. I've got GU here on a daily time frame. So I'll break it down. I'll look on a daily. We'll look on a 4 hour. We'll look on an hour, 15 minute. As I say, the lower time frames, of course, if you want to dabble in and out. The higher time frames, you're going to be patient and sit on those trades and allow them to swing into your TPs, baby. That's what we want. We want them swinging into TPs. So let's jump onto this. So let's take a look at GU here. I'm going to look the most recent opportunity, and then we'll just sort of work back and look at the example. So first one here, got a really nice flag structure. Look, I'm marking up this is what's known as a flag. Okay, flag, right? It's literally a flag. So this is the flag structure, and here's the pole of the flag, right? A flag has a pole. And obviously we were trending to the upside. We can see that we've been trending to the upside. That's the overall trend here. Look, trending to the upside. But this is what's known when we form these. This is what's known as like the market consolidating. It's having a breather. And you'll ever get those either to the upside, to the downside. It doesn't matter. You'll get these periods of consolidation where the market's just taking a break before it then resumes, it continues its trend. So here, as you can see, GU was consolidating between sort of the 9th of July up until the 20th. So just a period of sort of 10, 11 days there. And then before we continue to move to the upside. So what would I do in this scenario, right? I would have waited for a few days, obviously, before marking up this flag structure. I would have seen, because it comes with a little bit of experience as well. You can see when the market's starting to consolidate, when we're seeing some profit taking and people closing out of the longs, you can see it start to form, and you could have started marking up this, right? We really, for that to be sort of classed as a trend line, right, to mark the flag to the upside and to the downside, you want at least 3 taps. Look, to the upside we've got 1, 2, 3. So already I would have started marking up something there. I can see it's being supported there to the downside as well. So I would have started marking this up after sort of 1, 2, 3, sort of 4 days or so, when I can start to see that structure. Okay, and then where I'd look to enter, for me personally, where I look to enter now, I'm quite aggressive as a trader. I'm quite aggressive, and in the sense that with my own strategy, right? I know what works. I've seen it time and time again. So I'm aggressive. So on this trade, you may want to enter in anticipation of a break, and that's what I personally do. Or you may want to wait for the breakout and closure above. Okay, you can enter there on the breakout and the closure above this candle here. Or you can wait for the breakout, closure above, and then retest. The reason why some people want to wait for a retest is because sometimes it might be manipulation and it might be a fake out. We don't like fake outs. They're mother beeps. So it happens. It's just part of the game. So, but for me, I always enter in anticipation of the break. I then enter when I've got another confirmation for another signal for longs, and then I scale, add into my position as and when I see fit. That I go into my own strategy on that front. So in anticipation of break, so you can see now we've closed above. And then the price is just extended to the upside. But what I'd be looking to do in terms of the actual entry, I want it as close to possible as the lower acting trend line. Why is that? Because then my stop doesn't have to be too far below. I leave a little bit of room. Okay, I leave a little bit of room just in case of any wicks to the downside that are short-lived, and the body of the candlestick ends up sucking back within this flag structure that you can see there. Now, where's our TP going to be on this flag, typically speaking? Now, if we go by the rule of textbook and the rule of sort of my experience, you want to be measuring the pole of that flag, okay? So let's take a look at the pole here. What does this equate to in terms of sort of pips? So with the pole, it's subjective, right? It can either be, some people measure it from, obviously from here, you can see where we commence the upside momentum, up until right at the lower acting trend line, or you can go right to the top. I usually go right to the top, but I say as a safe rule of thumb, you could just be somewhere in the middle. Okay, so here, look, 300 pips. So I would have entered this trade as close to possible at this lower support. Okay, and then the price, so 300 pips, obviously it well and truly exceeded that. So our target would have been 128.20, would have entered around sort of 125.15. And look, we'd have gained a nice 300 pips. Now, if we go as well and see the RR in this trade, I would have placed it. You see where we wicked here? Would be just placing, again, for you, it depends on your strategy, right? How big your stop loss is going to be. But let's just say, for example, we're leaving a little bit of breathing room, entered here, leaving a bit of breathing room, some sort of 50, 60 pips. That's providing, look at that risk to reward ratio, 5. That's beautiful. And we've ended up massively exceeding that target anyway. So that's one example there. Let's take a look at another one, a larger one here. You can see another flag, price look consolidating, form a nice flag structure, right? Okay, all the touches below to confirm the trend line and all the above. Again, we're looking at the price action. We can see, look, we're consolidating. We know the price has been in a trend to the upside. And this is why it's always good to look at the higher time frames to make sure you're pretty much in line with the trend. I'm not totally against counter trend trading, but if you're
doing it, you should be aware of that, okay, baby? You should be aware of that because you don't really want to get caught out and you're like, why the hell was I caught? Why did I just get stopped out? Because you're counter trend trading, my friend. Remember, typically speaking, the trend is your friend, okay? Trend is your friend. So here we've got another flag structure. If we measure the pole, right? Again, 600 pips. And look, we've actually pretty much done that where the current price is now. So again, you'd be looking to enter. Okay, you can see we've tapped 3 times there below. Yeah. So entering as close to possible as to the trend line, leaving enough breathing room just below in case of any sort of sudden wicks. Again, look, 50, 60 pips. Your 600 pips to the upside. Bam! 10. Risk to reward of 10. And this is what I say about you have to have it in your personality to be willing to sit on that trade and let those profits run in. Let those winners run, baby. So that's another example there. Let's try and take a look at the lower time frames and go back a little bit. Let's go on the hourly. Okay, just to find some sort of shorter, snappier ones. Sure, there'll be plenty here. Okay, here's one here. That's part of the big, this is part of the larger one that I just marked up. Okay, flag. Look at that. Pips for the taking. Same rules there, guys. Exactly the same rules as we've discussed, right? Here's all of our pole. Okay, what's our pole equate to? Our pole equates to a nice 130 pips, man. 130 pips, baby, on the hourly time frame. Boom. Done. Done. Okay, again, placing stops just below. Okay, this obviously we're going to have a smaller stop because we're on a lower time frame. Right, even if we went 20 pips. Look at the risk to reward, baby. 6. Slit. So that's another example. Let's go now. Let's go and take a look at the 15-minute chart. Let's take a look here. 15-minute. Okay, I can actually see one already. All right, so here. And here's the flag structure. All right, this is on the 15-minute chart. These are all bull flags, actually. I'm showing you. We haven't really quite seen a pennant yet, but these are all bull sort of flag structures. Maybe we'll find the bears one in the next video. But this more or less the same sort of structure, but obviously to the downside. We'll quickly try and find one. Okay, here's another pole on a 15-minute chart. 66 pips, probably more than that, actually, about 70 pips. Look, here's perfect. Look, we broke out and retested that and then extended to the upside. And look, again, 70 pips done. Let's see if we can find any bear ones. I'm sure there'll be plenty. Let's just have a quick look where the market's been trending to the downside. It's just GU recently has just been extending to the north, like aggressively. Okay, here's one. It's on a 4-hour chart. You can see the market's been trending to the downside, right? Okay, trending. Now, look, we've got another flag. Not a pennant example, but flag. Okay, sort of flag. Sometimes you could class them as sort of ascending channels or descending channels, whatever the case may be. Pole, 150 pips. Break out the pole, the flag, 150 pips. Same thing, guys. So with this one, you want to look as closely as possible to this above acting trend line. Okay, for stops, get your entry after your multiple taps. You're happy with enough taps of that acting trend line. Place your stops just above. Then you're running for, where was it, 150 pips. Baby, around 4 risk RR. Can't complain, can you? Can't complain at all. So guys, I hope you found that really useful. As I say, you can use this across time frames. You can use it if you're trading on the weekly, your position trading by all means, but typically your dailies, your 4 hours, your 1 hour, your 15 minutes, baby, the pips are there for the taking. Thank you very much, guys. If you found that valuable, if you want me to keep going on this YouTube, have to please smash that subscribe button and like and comment below if you found it useful and if you actually trade this way. If not, if you trade similarly, just mention it in the comments below. Provide the value to the community. Let's get it.